Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The bull market 3 years in, the anniversary this weekend. We'll discuss and debate where stocks might go from here with even more questions about a potential bubble brewing. We will discuss all. Joining me for the hour, Josh Brown, Shannon Sakosha, Bill Baruch, and Jim Leventhal. So we were green, we turned red. We got a little work to do, but as I said, we're turning 3. October 12th is the official anniversary, and Truist says upside remains. Quote, the combination of continued economic growth, resilient corporate profits, and a supportive policy backdrop provides a solid foundation for maintaining a constructive stance heading into the 4th year of this cycle. Of the 7 bull markets that extended beyond year 3, all saw further gains during the following year. Josh Brown, you're first.
I think the big takeaway for people is that it's very expensive to miss a bull market. And this is a conversation we have with our wealth management clients all the time. You almost never recover if you sit these types of things out and watch from the sideline, or you're way under invested, or you spend the entire time waiting for it to end, and too much focus on hedging, not enough focus on capturing that upside. The S&P is up 89% since the current bull market started, as Judge mentioned 3 years ago. But if you look at the average bull market since 1950, they tend to gain 192%. Now, of course, that's an average, so there's a lot of dispersion at the edges, but we're less than halfway to that average bull market return. In terms of duration, the average bull lasts 5.5 years. So we're just about to complete year 3. It's a little bit more than half of the average, but there still could be a lot to go. And the thing I want to tell you about year 4, Judge, the average gain for the S&P 500 in year 4 of a bull market is still 16.2%. So if you were to apply that to where we are today, that would put the S&P 500 at around 7710. Now, of course, we're just talking about averages. That's not a price target, but I think people need to have that context and that background so that they understand just because stocks have been up, that in and of itself is not a reason to say, all right, that's as good as it's going to get. I'm done now.
JP Morgan takes a look at the retail investor through their retail radar, where they suggest retail accelerated their weekly purchases of stocks. Net purchases were $7 billion this week, well above the 2-month average of 5.3 per week. Retail investors continue to favor ETFs over single stocks. What does that tell you about the momentum that suggests is still behind this market?
The flows are strong. And I think looking at hindsight, I've been on the show over the last month or two and saying that we're trimming little bits here and there. And we had a good opportunity to do that, kind of just managing our overall risk and outperforming the market. It allowed us to do that. But I think when in hindsight, you look back at June, July, the S&P was only up 10% year to date. In the last 2 to 3 years, each year, 23 and 24, more than 20% year to date or yearly gains. And right now we're only at 15%. So if we match that, there's still a lot of runway here this year. What does concern me in the near term, though, would be you have in the NASDAQ and the Qs, it's 70% is 8 stocks, as you cited the concentration. 40% is a makeup of 8 stocks in the S&P. And we're starting to see some deterioration and momentum in the near term. We're starting to see some of that breadth continue to deteriorate. Now, I'm not sitting here bearish. I think there's going to be a strong finish to the year. But I would imagine that we get some sort of little bit of wiggle here to kind of refresh. And I would like to see that. I would love to put cash to work in what we've raised in order to capitalize on what's going to be a strong finish to the year and at least carry into April of next year. I expect whatever pullback we get in October to November is going to be a very strong thrust higher in through April of next year.
If you get the pullback, I mean, we got to wait for tech earnings. It's going to be the whole show. Tech earnings, and they don't come for a couple weeks, 2-3 weeks. So there's a air pocket of real critical market moving information until you get to those numbers, right?
There is an air pocket. I don't think that's enough to be bearish at all. And, Shannon, Josh, and Bill just went through reasons to be bullish. I'm going to go through reasons not to be bearish. Consider that notwithstanding the tech earnings are a little ways off, that we are looking at approximately double-digit year-over-year gains in profits. Consider that the economy is very far from a recession with Atlanta Fed GDP at 3.8%. Consider that the Fed is cutting rates. rates. This is a very hard environment in which to get bearish. If somebody were to get bearish, I find these arguments really to be quite hollow. One would be, well, the shutdown's happening and we don't know how that's going to end. History shows that's not a concern. Or one might say that it's expensive, the market's expensive, but that is never a catalyst for the market to go down. And by the way, if earnings come in better than expected, which has happened for the last several quarters in a row, maybe the market isn't as expensive as we think it is or as we look at it to be. So I'm bullish.
Well, you didn't mention anything about there is some concern about a deteriorating labor market. And if you look, well, I think a growing amount. If you look at some of the surveys that have been done outside of the government, the one from, I think it was KKR the other day, shows a pretty nasty picture of what's actually taking place within the labor market. And there are many other surveys that are out there that I just don't have in front of me, which tell a similar story.
To me, and I think to others as well, what we have is a condition here where there isn't a lot of firing going on, all right? And we see that in the weekly jobless claims, albeit it's been 2 weeks since we've seen them. There isn't a lot of firing, but there isn't a lot of hiring.
Right, no hire, no fire. That's
no hiring,
sort of
no firing.
People have been, phrasing it.
That certainly could be a lot better. I have 2 young adult children. I would like it for their sake to be a lot better, but that's not enough for me to get bearish.
I don't think there's an air pocket either. I reject the premise. You're going to get bank earnings starting next week, and these earnings are going to be explosive. Bankers are telling us these are the best of times right now. M&A, capital formation, deal making, unbelievable activity, both within the AI theme and external to the AI theme. And I think when you think about the financial sector and its importance to the rally continuing this year, cannot be overstated. This will be the 4th strongest earnings growth of all S&P 500 sectors in Q3. The financials as a group are expected to have earnings up 11.5%. Anybody want to bet me that's not going to be an upside surprise? More like 12, 13, 14? All 5 industries within the S&P financials are expected to have earnings growth compared to same quarter last year. Banks themselves, 9% growth. But you're going to see strength in insurance. You're going to see strength in anything related to the stock market, asset management, investment banking. And I think these fintech names have a lot to justify recent rallies, and you're going to get that too. You're getting it from crypto. It's just, in my view, not going to be an air pocket.
Well, you better have good earnings, though, considering where valuations are in the financial space. That's what Piper Sandler's talking about today. They say lofty valuations may be defying gravity. Banks continue to fly above the fray. The only real concern is that their lofty valuations may be defying gravity, which leads to questions about whether they can continue to outperform from here.
It's chicken and egg. There's lofty valuations because business is gangbusters. Yeah. Why would valuations be at a discount to history, or even at a 10-year average? For what reason? Things are very good in the space. I wouldn't expect these stocks to be. Well, you're paying for growth, but look at the last 3 quarters. Pick your favorite 3 or 4 large cap financial stocks. Is anyone not doing well?
But you don't even need the exciting stuff that you talked about. Just basic loan growth, is likely to accelerate. Insurance, like you said, that's not an exciting business necessarily, but all of those are set up, to your point, to continue to show both top line and bottom line growth. And so you're right. I mean, it feels
also aggressive activity. So ICE steps up with a $2 billion investment into Polymarket. Like this. None of these things would have been happening even as recently as a year or 2 years ago. Fifth Third steps up and takes out Comerica. There's a lot of aggressive activity happening in the financials that has absolutely nothing to do with how many GPUs are being bought.
Why have many of the names within the group, the largest ones, over the past 30 days, not done all that much?
Because look what they did in the first half of the year. These are all still in statistical uptrends, but stocks that have gone up a lot. Here, there's your chart.
But you're saying that earnings are going to start the next leg for this group?
If we see anything even close for the money center banks to 9% earnings growth, who's selling?
I'll just come out and say yes.
Well, Goldman says you're to buy Citi calls ahead of earnings. So if you want to do something ahead, buy calls. Citi's on track to meet medium-term targets driven by solid fee growth, efficiency improvements, and strategic divestments. The option implied moves capturing earnings are attractive versus its average 8-quarter earnings day move.
Look, Citi has a very specific set of circumstances to it, not necessarily applying to Bank of America or Goldman Sachs, but they're about to do the Banamex transaction sometime in the next 3 to 4 months, spin that out. And after that happens, I see absolutely no reason why this should trade at a discount to tangible book value. It's just below that right now. I mean, you look at something like Bank of America at 1.9 times tangible book value, and I say rhetorically, why shouldn't Citigroup be there? And if that were to happen, that would be almost a double from here. Now, it's a little bit provocative. We'll talk again when we're at 120% of tangible book value, which would be around 120, 125
well,
on the stock.
It was provocative way back, pull the chart way back when you first got into it.
That was like
50%. Made the case for Citi in the face of what appeared to be a lot of headwinds and what appeared to be an extremely heavy lift by Jane Fraser. She's lifted.
She's done a good job.
Lifted.
She's done a really good job. She hasn't gotten full credit for it yet.
Come on, look at the stock. What do you mean she hasn't gotten full credit for it?
Okay, because it trades at less than, good question, because it trades at less than 10 times earnings. As I said, just a hair under tangible book value. And you got Bank of America, fine bank, trading at almost twice the multiple of tangible book value and about 40% higher multiple of earnings. So I think there is a lot more opportunity left to come in Citigroup.
Sector-wide, the beat rate for financials 80% this year. Okay,
How do you get bearish here?
Well, that's my point. Is so taking Q4 numbers, which were reported to us in January, right, and taking Q1, Q2. Now we're going to have Q3 reports. 80% beat rate in this space, and tons of upside to guidance each time they've reported. Even during the spring, these stocks held up pretty well, considering how scared most of the market was about the impact of tariffs. I think they deserve the benefit of the doubt. The one that I'm in, JPM, one of the best performing stocks in my portfolio, probably in the whole S&P 500, depending on the time frame. This stock has just been explosive during the last 2 years of this bull market. This is a company that's still looking to post $4.83, which is a 10% year-over-year, or 10.5% earnings growth, 5 and change percent revenue growth. It's a 14.5 forward multiple, with and it's a company with 20% net profit margins. Like, who's hitting the sell button if they do the number? I can't even imagine why you would.
All these names all hit record highs within the last 3 weeks. Now,
all right, we got it.
If you're looking at them, they typically spike. If they get good earnings, you're going to get a spike. They typically come back in a day or two following that, but the earnings story will tell you what to look for and then to buy that pullback.
I read a stat to you that says AMD is up 43% in 3 days. In 3 days. You sold the stock before.
It's a repricing, yeah.
Does that sound like it's okay?
It sounds a little.
I'm not saying it's not. I don't mean to ask it in a way that suggests it's not. But 43% in 3 days.
It's absolute repricing, and there was zero flows, zero interest in it. It was almost, in some argument, left for dead. The technical picture was ugly, but if you back it out a month, then you look at a name like Micron, up 50% over the last month. AMD is up about the same amount over the last month. Like a Lam Research, you go into the equipment names. A lot of those names are up 40 to 50% over the last month. AMD was, before that moment, was up zero.
Can we put the 1 year chart of AMD up? Nope. A little bit. Back it up a little bit.
They will.
I think it's an important point that you raised. Who buys charts like this? Who's the buyer today? I can't even imagine who that, like the last Muppet that must own this stock no matter what. I can't even imagine what the thought process is. It looks incredible, obviously, but like, does nobody think that there's the potential for 2 or 3 bad days in the market? Half of that 43% to be wiped away?
Retest 220, 215. What was that? The March high from early last year.
Yeah, no, I think it's a valid point. You have multi-$100 billion market cap companies going up 40 and 50% inside of a week.
Yeah.
It's ludicrous activity. It doesn't mean AMD doesn't deserve to be there. It's the speed at which these things are happening, which is why I said at the top of the show, I don't know that we're going to have a news air pocket. Every day I wake up, there's some massive deal between Oracle or NVIDIA or OpenAI or AMD or all four at once, it's really hard to look at this market environment and say, yeah, there's going to be a little bit of a news ebb. I just don't see it.
There's a big pick of winners, obviously, and perceived losers. I mentioned the JP Morgan Retail Radar report that they put out, suggesting that investors have accelerated their weekly purchases of stocks. More to that, they certainly have when it comes to tech. Almost $600 million in Tesla, $370 million in NVIDIA, $241 in Meta this week. But they actively dumped Apple shares, almost by $200 million. So it just sort of says where we think we are. The market is chasing the perceived winners, and it's not really interested in the perceived losers. Now, we're not going to hear from Apple for a while because obviously in the week in which most of the mega caps report earnings, we have to wait. Of course, $5 away or so from a new closing high. We've been watching that. Stock's pulling back, obviously, a little today. What's your point here?
I just wanted to point out Apple very publicly has made it clear that they don't see the value in launching a chatbot-like product direct to consumers in the Apple ecosystem. But the last week or so, they launched something internally for their employees that is a chatbot, and it's Apple's own. It's not someone else's LLM in a wrapper. I thought that was really interesting, and some of the voices in the tech industry believe that it might be a head fake, and there might be a ramp for Apple to at some point actually drop their own direct chatbot competitor to some of the prevailing. Now, you might say, well, they're late because ChatGPT and everybody likes Perplexity. I don't know that Apple can ever really be too late, given the installed base and the power they have, if they want to make that consumer-facing chatbot like the biggest thing in the App Store. They literally could do it overnight if they wanted to. So I just think that's this wild card thing that's out there, pure speculation. But if they have a really good result internally with this chatbot-like product, and they decide, you know what, actually, we can own this, my God, is that going to shift a lot of things about current market expectations for who's going to be winning the AI race in the eyes of the user.
All right, so we're going to take a break. Coming up, JP Morgan getting all up in Josh's grill before the lunch hour, no less. All right, welcome back. JP Morgan went and did it, okay? They named Shake Shack a top short idea into year end.
Well,
I mean, they say we see high absolute menu prices and are cautious around broadening away from top-tier ingredient suppliers, lower than guidance TAM to balance high price points with future customer breadth frequency. Now, Shake Shack did get downgraded earlier in the week by B of A to underperform. They cut the price to 86 from 148. The stock's moving higher, I think, because someone's expecting you to say something positive and defend one of your favorite names.
So I don't defend stocks. They might end up being right in the short term. I'm a long-term investor here, and this is not the first time people have downgraded Shake Shack because I'm in the name for almost 11 years since they came public. The thing I would point out here is nothing they're saying is new to the market. The stock is in a 28% drawdown already. So it looks like they want to press their bet. They actually said short the stock in July, and it ended up being a really good call. The question is that still as good a call from 148 as it is here where the shares trade today? I'd point out what they're saying is actually true. The consumer is being pressured right now, and you're not just seeing that at Shake Shack. Kava is struggling. Sweetgreen is struggling. Chipotle looks terrible. So this is a sector-wide phenomenon. This type of thing does come and go if you're a long-term investor in the QSR space or the premium casual, whatever they call it these days. This is just something that you're going to live through. What happens, though, is that eventually they price too much of that in, and then these companies start to surprise to the upside. The other questions they're raising are about Shack's expansion plans. The new CEO wants to go to 1,500 units. There's some questions about whether or not that will lead to cannibalization, which I think is absurd given the size of the world. I think 1,500 Shacks will be okay. So I don't disagree short term that there is consumer spending concern. I do disagree with the idea of getting short a stock that's already in a 30% drawdown where enough people already are worried about it, that they could have upside surprises.
I thought your tummy was going to rumble a little bit more on this call. You handled that well.
Well, I'm not here to defend anybody. I'm an investor. Look, if they knock this thing down into the 70s or 80s, I just buy more. I've done it every time.
All right, let's get the headlines with Bertha Coombs. Hi, Bertha.
Hey, Scott. Transportation Secretary Sean Duffy says air traffic controllers who fail to show up for work during the government shutdown could be dismissed. In an interview on Fox Business today, Duffy said the, quote, small fraction of workers who have been absent were causing the spike in air disruptions. The union for the air traffic controllers has yet to respond for comment, but has urged workers to keep working. Safety regulators are opening a probe into nearly 3 million Tesla vehicles equipped with the full self-driving system over traffic violations following a series of crashes. The National Highway Traffic Safety Administration citing reports of Teslas driving through red lights and against traffic while changing lanes, including 4 crashes that resulted in 1 or more injuries. Tesla has not commented.
Shan, what do you think?
I think an interesting point, if you looked at that graph, was actually the increase in cash that millennials are holding. I think part of this, too, is not only being able to barbell cash and fixed income with some of these more private assets, but millennials also have this entrepreneurial spirit. And so rather than invest excessively in public equity markets, they're really looking to be able to align themselves with companies, investments that they believe in and that can truly make an impact in terms of financial for them. So I think it's a little bit less about just a, kind of private markets democratization story and more about this idea that millennials want to take control of their finances and invest it in a way that perhaps is a little bit outside of that traditional framework.
Do you have a thought here?
Yeah, it's nonsense. If you were born in 1996, you should have 100% stocks, and every time you get paid, you should take whatever amount you're setting aside for the future in your retirement accounts, where you can't touch the money anyway, and plow that into stocks. And you should bet on yourself having decades to endure the risks that come along. You do not need alts at 27 years old. Nobody needs it. It's. By the way, this is a survey. I actually don't believe those numbers.
And things like that too. It's not just private equity. I mean, there's other
substitute crypto for like very aggressive.
Don't forget
stocks,
the gold. Gotta get the gold in the portfolio.
I don't believe that survey. I do not believe people in their 30s are 20 or 25% alts. I think they are maybe, but they're definitely not.
They might be 25% crypto.
They have shoes.
Do you think across the whole spectrum of 1,000 high net worth millennials, they're 25% crypto?
I think it's closer to 25 than 5.
You know what? That might be a good point. I'd like to see a breakdown between crypto versus other forms of alts, because I don't think they're in mezzanine credit funds.
Well, a lot of these have been invested in Bitcoin or other coins for the last decade, since they first put it on their app.
Fair.
Yeah, alternatives is such a bucket here. That's like
it could be almost anything.
Yeah,
maybe
exactly.
it's a pretty stock in the companies they work at.
Yeah.
Okay, fair.
Okay. All right, we're back. Josh Brown's best stocks in the market. An update on which name?
I want to talk about Netflix. I wrote this up with Sean Russo back in July. 87 days ago, the stock has basically been flat. It's done nothing. It's sat out this entire AI mania, but I think that could be about to change. Company reports on October 21st. I am long the stock personally, by the way. You can see this thing has bounced off of its rising 200-day moving average. And I think the fact that it sat out actually works in your favor here because expectations are not terribly high. This is a company that's had massive hits during the course of this quarter. Jim, do you know what a K-pop demon hunter is?
I've heard of it, Josh.
Okay.
Does that count?
Good enough. Nobody actually knows what it is. I'm going to tell you it's the biggest hit that Netflix has ever had.
Nor has he ever heard of it, by the way, but that's okay.
325 million.
Thank you very much.
325 million streams of this. This has beaten every single Netflix show or movie in history. The music from this thing is #1 on the charts. That's the kind of thing that drives increased subscriber ads. That's where you get that kind of upside to the ad platform as well. So they report in a couple of days. I'm long the stock. I like the risk reward headed into there. The high target on the street is Bank of America. They're at 14.90. That would be about 20% upside from today. So remain long Netflix. I know it's been boring, but I wanted to bring it back to people's attention. Still in an uptrend. Still very close to a breakout.
All right, good stuff. Thank you for that. We'll do finals after this break. Final trades. Farmer Jim is up first.
Oracle is up about 10% from the Bud Fox moment 2 days ago. It's got more to go.
The abyss. The abyss. Yeah.
Thank you.
Wall Street.
Bill Baruch, what do you got?
UUP, long dollar. It's closed above its 21-week moving average for the first time since February. Got to watch the dollar.
Do you think he was referencing the abyss, that he didn't know that Bud Fox was Wall Street?
That's the line from Wall Street. Man looks into the abyss, right?
Okay, that was a little obscure, but keep going.
Not,
Okay.
Not for some of us.
Shannon.
Materials, we see commodity price inflation, but also a trade on some China reacceleration.
Okay, JB.
Staying long Netflix. Wish me luck.
Hey everybody, welcome to Blue Cloud Trading. I'm George. It's Friday, October 10th. It's 11:58 a.m., almost 12 noon, and we just saw some clips from yesterday's halftime report. We're going to take a look at the markets this morning, and we're also going to take a look at some of the stocks that they talked about yesterday. So look at the market right now, guys. It's down 1.10%. By the way, I've been on vacation here in Florida. So yeah, my schedule's been a little bit thrown off. But anyway, just wanted to fill you guys in on that. But basically what we've got here is the Dow is down 1.11%. You can see here it was stable in the morning for the most part, just basically staying above the closing price. And then what happened? Well, you can see that little triangle there. Boom, it dropped. What happened? Well, let's take a look at the news, actually, because that's what triggered that big drop that you see there. Wall Street falls after Trump warns of higher tariffs on China. Not good, not good. Here's another article. That was from Reuters. Here's CNBC. Dow drops 500 points and sell-off intensifies after Trump's critical comments about China. Stocks moved decidedly lower in a rapid move on Friday after President Donald Trump threatened higher tariffs on China, accusing the country of becoming very hostile with its restrictions on rare earth metals, a key resource for the tech and defense industries. And then we've got a Wall Street Journal also basically with an article there as well. So let's take a look again. Let's get back here to the, there we go. So Dow down 1.05%. It looks like it might be stabilizing a little bit now at these levels. You can see, these last three candles here is kind of staying at that level. Same thing here. NASDAQ is stalling. What we've got right there is a bullish engulfing type pattern, and it could potentially reverse here. The NASDAQ is down 1.73%. S&P 500 is down 1.51%. Russell 2000 down 1.63. If price continues to drop under the lows here, though, I think we're going to see a continuation to the downside. Let's take a look at the heat map because it's looking red. It's looking very red. A sea of red here mostly, except for certain areas like consumer defensives are doing okay today. Tobacco, people are smoking. They're a little stressed out, maybe. I'm guessing. They're drinking their Pepsi, their Coke. Walmart's doing all right. It's up 0.99%. Utilities are up. Okay, people still need their electricity, don't they, for their laptops, computers, whatever. And AI, of course, needs a lot of power. Netflix is up 0.46, T-Mobile is up 0.88, AbbVie is up 0.76, but everything, the majority of the stocks are all down. You can see in the red the percentages here, like Amazon down 3.06, Tesla down 2.5, Meta down 2.63. All right, everything's down. And let's look at the sectors so we can get a better idea of what specific sectors, okay, specific sectors are doing, because this is a little bit more inclusive of a lot more stocks than the S&P 500. So you can see consumer defensives and utilities are the top performers today as the market is dropping, right? And consumer cyclical, technology, and energy are the worst performers. For the 1 week performance, utilities up 2.05%. So that's interesting, isn't it? And consumer defensive. All right, now let's get into the stocks. We're going to first start off with the S&P 500, the QQQ, the Dow, the Russell, the VIX, which is up 20.88%. Look at that big spike today. All right, that's no bueno. It's up 21.61%. Popping through the Ichimoku cloud. We're going to use the Ichimoku indicator here so I can show you guys how important it is to also utilize technical analysis, all right, to help us identify what's really happening behind the scenes. You can see the CNBC. Here's the CNBC stocks. These are the stocks they talked about in the show. Not all of them. Some of them are in my portfolio, and I only share that with members. But basically, there are just two stocks here. You can see AMD and Oracle are the top performers, or they still were looking technically sound when I looked at them. I don't know. We'll have to look again. But these are the only ones that I've got flagged with a blue flag, which means that they're still technically sound, but the rest of them are not looking that great. They're all down, though. Here you got the Mag 7. We're going to go over Tesla, Apple, and Meta, and we're also going to go through a number of member requests. There's about 12 of them. And our members have a lot of blue flags here, which is positive. Even though some of the stocks are down, they're still looking pretty technically sound. So we're going to get into all these, okay? We're going to do it all in this video. Let's go ahead and get started with the S&P 500. So here we are, and we're using this indicator called Ichimoku. It's a Japanese indicator. We want price to be above these moving averages. The green line is the 9 period, the highs and lows divided by 2. So it's the midpoint of each candle, the last 9 periods. In this case, 9 days. And it's plotted right there. And sometimes it flattens out. It's unlike most moving averages, okay? The red line is the Kijun-sen, and that's the 26 period. Highs and lows divided by 2. You can see that also flattens out. When it becomes flat, it becomes a much stronger level of support when price is above it, and a much harder, level of resistance if price happened to be underneath it. Right now, you can see what's going on here. This is the big red candle, down 1.61%, but it is stalling, which is good here, right at the Kijun-sen today on the daily chart. So that is good, but nonetheless, we got the directional movement index here. Now the setting here is 9. Okay, we've got a setting of 9 for both the directional movement index and the ADX. Now, there it is, the white line right there. That represents the momentum, and you can see the momentum is dropping here, and the negative DI line has crossed above the red line there, crossed above the green line. That's a negative situation. We want, as you can see here, as long as the green line's the majority of the time stayed above, it could be a short-lived situation. Let's not forget that this has happened in the past. It happened over here where the red line crossed above the green line. It was a very short-lived scenario there. It happened right there where it found support at the Kijun-sen, right? It happened here where, again, it found support at the Kijun-sen and then bounced the very next day. So next week, when all of this hopefully blows over, maybe it will, maybe it won't. We don't know until Monday or later today, because the market is still, you can see the percentages here changing here. And here's the timer, 12:05, as I'm, recording this live here with you. So, yeah, basically, this is not a good sign, but it has not broken through this very important level of the 26 period. And we still have some support levels below on the daily chart. We've got the Ichimoku cloud, okay? And as long as price also remains above the cloud, that's also very bullish. We've got the Chiku span, that's the white line there. That's closing price. It hasn't really closed yet, but the current price projected 26 periods ago in a line form, okay? And that is above price still, so that's also bullish. On the weekly chart, I just want to show you really quickly here, okay? We've got a bearish engulfing pattern. This is a bearish pattern. It consists of 2 candles, these 2 candles right here. And if I show it to you here on the, this is the candle pattern reference sheet, we go to bearish, the signals over here, we look under double candle patterns, we zoom in here, and we can see this is what it is right here, that bearish engulfing. So it's a small candle followed by a red candle that engulfs the body of it, engulfs the prior smaller candle. That's precisely what we got right there, okay? So on the weekly chart, we're still holding up above all the moving averages. Remember, we're in a very bullish run here. It's the bull market for this S&P 500. And it's going to take a lot more than just one day for this thing to break it down completely. And as long as I think we also hold up above the Kijun-sen, I think we're going to be okay, as long as things don't get out of hand as far as the what's going on with China. So let's look at the Qs now. Now that you know all the rules here, we can go through all of these very quickly. Here's the QQQ, also dropping through the Tenkan-sen, still holding up above the Kijun-sen, the red line, on the daily and on the weekly chart as well. All right. Dow Jones. Okay, here it is on the weekly chart, a bearish engulfing pattern, holding up above Tenkan-sen. So Dow is actually looking stronger than the Q. I'm sorry. I take that back. On the weekly chart, it's got a bearish engulfing pattern. On the daily chart, it looks more bearish, Why? Because as you can see here today, the Dow Jones, okay, it looks like it may potentially close under the 26 period. Here we got the negative DI finally crossing crossing above the positive DI. That's also bearish. So we'll see what happens here. The Chico span is technically still above the candle right there. What about the Russell 2000? That's down 1.73 currently. It's still dropping or maybe improving. We'll see. But basically, that one also currently is under the Kijun. We won't know again until 4 p.m. where we end up. I'm just doing a midday sort of video here for you. Here's the VIX. Let's take a look at that VIX. Okay, it seems to be dropping. So as you can see that, which is a good sign. The VIX is basically the volatility in the markets, and we had that big spike. It actually reached a level here, a high of 17. Wait, I take that back. Of 22.18. Now it's at 20.75. So it seems to me things are cooling down a little bit. Let's look at the 5-minute chart. There it is. Okay, so here we are at around 11 a.m. when things started to spike up. I'm guessing that's around the time that he probably posted that he was not going to meet with the Chinese leader, and he wasn't happy. And of course, boom, we have that big spike. Now, this is a good sign right here. Those two candles on the 5-minute chart, that's they call that a bearish harami. We want to see the VIX dropping, but now it seems to be finding some support right in this area here. Anyway, we'll see what happens with that. It's starting to move up again. Here's a 1-minute chart. You can see looks like it's finding some support on the 1 minute, the volatility here on the cloud. Let's go to the FEZ. This is the Eurostoxx 50. Eurostoxx 50 also down 1.03. Notice though, it's not as down as much by percentage as these other American indices, okay? So FEZ, the Eurostoxx, doing a little better. They're also holding up above the Kijun and the 6150, at least for the time being. I mean, it's really close. So again, we'll see what happens there with that. Let's take a look at see the stocks they talked about on CNBC. And as I mentioned earlier, I already reviewed all the stocks, and there's 14 of them we're going to cover here real quick. AMD is basically, AMD. Okay, technically, the reason I've got it flagged here with a blue flag is because, as you can see on the price is above the moving averages. Price is above the cloud. And by the way, just for those of you who are new to this channel, the cloud is comprised by taking the midpoint of the two moving averages and projecting it 26 periods into the future. The purple line, that's the Senko Span A, the light-colored blue line. The purple line is the Senko Span B, which is comprised by taking the midpoint of the last 52 periods and projecting that into the future. We want that Senko Span A above the Senko Span B. We do have it here on the daily chart. Tenkan-sen, the green line, is above the red line. That's bullish. Everything is looking okay, except for the fact that today it's down 5.91%. So AMD dropping. And yesterday, you can see here we had a spinning top. That was a reversal candle on Thursday. And here it is dropping today. All right, let's continue. And this is what the weekly chart looks like. Okay, we had a big spike. By the way, I had a position in AMD that I closed out of on October 6th on this candle here when it reached the 227.30. Now, why did I close there though? That's an important question, right? Or, you know, basically, if you look at the weekly chart, and this is precisely why I always say, guys, take a look and see where is prior levels of resistance. You go back in time. In this case, I had gone back to this date here. So that was on Friday, March 8th of 2024, where we had this reversal candle. See that long wick? It's called almost like a shooting star type candle. And then what happened? Price dropped, moved up, found resistance at the Kijun, and dropped. Moved up, found resistance at the cloud, top of the cloud, and dropped, right? And then finally broke through. Now, I added a position here back on August 13th. Price dropped a little bit. I still held my position, okay? It was still above the cloud. You know, it's not always, folks, going to go your way immediately the second you buy the stock, okay? You're doing a best estimate. And as long as the weekly chart is looking good and the daily chart are still looking, they're both kind of in confluence and they're not completely broken, you can still hold positions. So now here's what happened. Price dropped, found some support at the cloud, okay, and bounced. And then it reached this level. And then I was watching it and I noticed when it got above the 227.30, you know, I held on and then it started dropping. Okay, that happened, during on October 6th. So here's a daily chart. Let me just show you. Let's go back to the daily chart. It reached that level. It reached that level there, and I basically got out the second it hit that close to that level and started dropping there. You can see that little tiny little wick there. So it started dropping. Now that led to a 26.3% profit. The very next day, you can see it gapped up a little bit. Then it moved up above that to 27.30. Then we got that reversal candle yesterday, and here it is now dropping back under. So it's a a lot of hesitation here. We didn't see a follow-up candle here moving to the upside, basically. So anyway, let's keep. I'm just sharing a little bit more info here. This is how I assess stocks and when I'm like trading. And if you become a member, you get more in-depth. You get to see the videos that I post on the weekends where I go over my entire portfolio. Like the last one I did was on October 3rd. And here's a list of all that you can go back in time and check and see all the stocks that I've added, closed out of, because I summarize all the trades at the end of the week. And if you want to get access to daily trade updates, what you would want to do is click the join button, which is right next to subscribe. Click on that join button, scroll down. So Blue Cloud Trader is the level that you can actually see those exclusive member-only videos, right, each weekend. But if you want to see the daily trade updates, you upgrade to Blue Cloud Legend, and now you get to access the daily trade updates as well as those, and still get to see those member videos, all right? And I basically post them, and then you would find them. Once you become a member, there'll be a new tab that pops up. It will say membership, so you'll either see them under posts or membership, and that's where I post them daily, Monday through Friday. Okay, so there's always a record of all the trades that I'm placing. Now, let's get back into this. Okay, so Oracle, folks, Oracle. How about this one? It's a stock that I'm still holding. All right, now I got into this one on September 22nd. You can see it's bouncing right there. It's up. It was up, and it looks like it's around the 0.04%. It's still technically sound on the daily and on the weekly. All right. We'll see what happens there. KBE. This one here on the daily chart, you can see it's entered into the cloud, and it might find support here. I certainly wouldn't be adding positions. Okay, this is the reason why I'm sharing this, is because, yeah, they talked about these stocks in the show. They're recommending these stocks in the show. But does it make sense to be adding when the technicals are looking unsound? And the answer here is no. And when did this start falling apart a little bit is you can see the Chico span got under price, right? Right there, the white line. You can see the negative crossover right there. The green line crossed under the red line. That's also negative. Now, it was finding a little bit of support briefly, and now it's inside the cloud. So you don't want to be holding positions here. You don't want to be adding new positions, okay? You could certainly decide whether you want to, if you have a position in KBE, it's up to you to decide whether or not you want to hold that position longer. But I can tell you this, that the momentum is now increasing. See that the ADX line right there? It's starting to move up as price is dropping. That's not a good sign. That's telling us the momentum is increasing to the downside. And you can see that from the percentage decline. JPM. Here's another one that I closed out of for 7.2% profit. I added it back on August 12th. It basically remained up for a while, and I got out here. Now, what's happened? It's actually dropped just 3%, and it looks more bearish, right? Got under the Kijun-sen right there today. What about ICE? This is Intercontinental Exchange, another stock they talked about. This was not a big profit. It was only 3.3 back here. But you can see it's been, from these highs here, it's dropped 16.52%. So I'd stay out of Intercontinental Exchange Inc. How about FITB, Fifth Third Bancorp? That one's it looks like it might close under the cloud today, possibly. Right? Remember, we have to wait until 4 p.m. or around that time, and you'll know where this candle finally resides, right? Will it be inside the cloud or under? If it's under, it's going to be more bearish. Certainly, I wouldn't be adding any positions to this stock just because it dropped, because you don't know how long this is going to be, how long this decline is going to continue. We want to see strength before getting in, right? The time generally to get in is when price emerges out of the cloud, like in this candle here, okay, over here, where it gets above the moving averages in the cloud, You can see how it moves up. You don't want to be getting in here. That's usually the beginning of a decline, possibly like over here. See that right there? It dropped under the cloud. And then from that point, if you measure to this low here, it dropped 24%. So this could happen. We don't know. But we can see it on the charts, and that helps us get a better understanding of what's really happening. And we're not just relying on what people are saying on, the halftime report or closing bell. As much as I like watching the show and learning about new stocks and companies, and getting some ideas for stocks too, by the way. I review these stocks because sometimes I might want to buy one. Here's Citigroup. This one does not look good right now. It's pulling back, but it's might find support at the cloud. It broke that trend line right there. That happened on Wednesday. How about WFC? No, it's under the cloud. How about LRCX? Under the Tenkan-sen, finding support at that 133.57. So this one might bounce here, but I wouldn't be adding quite yet. Shake Shack hasn't been looking that great here. You can see that once it got inside the cloud here, from that point, it's dropped about 30.9%. That's a big decline there. Okay. So weakness when you're inside the cloud or under the cloud, and it looks like it's going to continue its journey to the downside. See how it broke that low right there? That's not a good sign. All right, let's keep going. How about Cava, CAVA, also under the cloud here. Once it entered the cloud, from that point, it's dropped 26.89%. How about SG, Sweet Green? Ooh, look at this one, folks. Look at this one. Yikes. All right, so like here, it entered the cloud around this area here. This was back in 2024, actually. Get rid of these lines. These are old lines. We don't want things to be messy. All right, so it got under the Kijun-sen. That was weakness right there. That could have been a place to get out, for example. It's dropped 79.52% in what, in a span of approximately 10 months. Yeah, it lost almost 80% of its value in a very short period of time. This is what I'm talking about. This is how you can help stay out of these declining stocks, because again, you might say, you know what? Yeah, but don't I want to buy it after it's dropped in price? So maybe you buy here and then it just drops some more. Oh, you know what? It drops some more. I think I might buy some more of that stock here. Ooh, comes up to the cloud, drops some more. Maybe this is a buy point. No, it's not. It just isn't. That's my point. Wait for confirmation. If you go back in time, when price got above the cloud right there, it led to a nice move, basically to around that area there where it got into the moving averages. It looks like it never got into the cloud here, but you could say right there, that's a 90% move right there. And from, say, this point, it was another move up about 30% in 27 days. So you can see how basically you can benefit when you're above the cloud. You're on the right track, right? You're going in the right direction. You've got a declining 200-day moving average here as well. Your money, you don't want to tie your money up in stocks that are declining, okay? Look for the strong ones. Look for strength, not weakness. The U.S. dollar, UUP, has showed a little bit of strength. Bill mentioned something about UUP as his final trade, right? But I wouldn't recommend it. I'll tell you why. Here's a weekly chart. And by the way, it's more helpful if you look at both time frames, the weekly and the daily. Get that confluence. Get both time frames confirming that it's okay to go long. This is not indicative of a strong uptrend here. It just found a little bottom at 27. And yeah, it's moved up a little bit. It could be short-lived though. That's my point. So yeah, it came to the 200-day moving average. It stopped dead in its track at that 200. And look at it. The dollar is dropping down 0.46%. It's more likely to pull back some more. And what's pushing the dollar up anyway? Is there anything to like justify the US dollar moving up? Let me know in the comments. IYM, basic materials. Okay, this one dropped also down 0.79% on the daily chart. And let's look at the weekly chart. Weekly chart doesn't look terrible here. This was Shannon's final trade back in June. Yeah, the weekly chart's still bullish, but the daily chart for IYM, at least the ETF itself, has dropped a bit here, down 0.79%. All right, let's keep going. How about the Mag 7? These are some of the stocks that I don't have in my portfolio, like Tesla, for example. This one down 3.16%. It's under the Tangensen. It's in between the two moving averages. I'd hold off on that one. And let me show you what the weekly chart looks like. Here's the weekly. It looks more bullish on the weekly chart, okay? Because it is still holding up above. But these reversal candles are not a good sign. You get the bearish engulfing pattern, okay? And let's not forget, I don't know if you guys read, did you guys read that new article about the automated oh man, but it's about the vehicles. I think I may have posted an article on my X page. Let me just check real quick. Okay, so I apparently did not post it on my X page, which by the way is at Blue Cloud Trader. Okay, guys, at Blue Cloud Trader. Check this out. Many times I post some articles here. Whoops, let me go back. Sorry. There we go. Where was that article? Here it is. Check this out. This is from Euronews. U.S. watchdog probes self-driving Tesla cars in blow to Elon Musk. U.S. This one came out on Friday, October 10th at 8:07 a.m. All right, today. U.S. safety regulators launched a probe into Tesla self-driving cars affecting around 2.9 million vehicles after reports emerged of vehicles running through red lights, veering into wrong lanes, and crashing in some instances. The National Highway Traffic Safety Administration said in a filing that it is looking into 58 cases in which Tesla reportedly violated traffic safety laws while using the company's so-called full self-driving mode, or FSD. The new investigation adds to several other open inquiries into Tesla technology that could upend Elon Musk's plan to turn millions of his cars already on the road into completely driverless vehicles with an over-the-air update to the software. This is some scary stuff. Can you imagine? We had that if that went into effect, it could like certainly increase the number of accidents, and it's pretty dangerous stuff. The probe comes as Musk, whose fortune as the world's richest man derives partly from Tesla stock, has promised to roll out hundreds of thousands of driverless taxis in cities around the U.S. by the end of the next year. Yeah. Anyway, so let's get back, folks. I like to steer off directions here. So we talked about Tesla. Apple is another stock I'd stay out of, folks, because Apple will be severely impacted by tariffs if the relationship between the U.S. and China continues to deteriorate, which is possible. You can see what's happening here. I've been talking about this 260 level with Apple for a while now. I said, guys, we've reached this level here of 260.10. Price dropped. This happened back in 2024. Okay, that was on December 27th, 2024. Price dropped, came back up, dropped some more. It's come back and retesting that old high. Okay, price stalled. And look at that, a bearish engulfing pattern, like I mentioned earlier, right? Where the big red candle engulfs the prior small candle and dropping now under this level too. So that's the weekly chart. Here's a daily. Not a pretty sight. This ADX is also giving us the confirmation that the move up, which we had here with the green line above the red line and ADX moving up, that momentum was positive, has now, you can see that sharp drop. See that little, looks like a mountaintop there? It's pulling back now as price is dropping. Red line is now crossing above the green line for Apple. That's why I'm not interested in this one. How about Meta, which is down 2.32%? That one's been under, this one, you can see here that slope down, lower high there from that prior high. And we got a lower low here from this low, and it's still under the cloud. So no on Meta, in my opinion. Now we're going to get into the stocks that our members have requested, some of our members. SLVR, we'll start off with that. We've got the strongest ones highlighted with a blue flag at the top. SLVR, price hasn't closed yet. Let me just, if I accidentally say that it's closed under, that's my, I'm forgetting because I usually do my analysis after 4 p.m. Right now it's 12:29 p.m. The market has not closed. It could certainly, by the end of the day, SLVR could certainly get back right above that level. Okay, let's take a look at this actually on a 5-minute real quick. All right, so this is what it looks like. You can see it's still in the cloud on the 5-minute. On the weekly chart, very strong, but look at this long wick. That's a reversal type candle. Daily chart, if it closes under Tenkan-sen, it might pull back some more, maybe to the Kijun-sen. That's about another 6% drop, just to that next level of support, 26 period. So that's basically what I've got for you here on that one. CCCX is Churchill Capital Corp X. On the daily chart, we've got ourselves a hanging man type candle. You know, let me show you guys that candle pattern here. Whoops, there we go. It's bearish. It's a long wick. It's under the bearish single candle patterns here. After a move up, you get that red small body and a long wick at the bottom. Now, what I'd be watching with this is if price gets under the low of that candle, it's more than likely to continue. It's going to probably drop under these two moving averages and continue to drop. It's a very volatile stock. You can see it's up 5.6%. I'm sorry, yeah, up 5.6% today. But it's looking like it's dropping right now as we speak in live, right? 12:30. Let's look at the 5-minute chart on this. Yeah. So here we gapped up in the morning, and then it just kind of started to create lower highs. So here's the high of the morning, right? It dropped over here, created another lower high here, a lower low here from the low here. And so now we'll see what happens here. We don't know. We're in between the opening price, which is this dotted green line that you see right there, and the closing price from yesterday, that dotted red line. So, yeah, I wouldn't be adding a position here, and I would probably be considering, you know, look at the volatility. Just this week alone, it's moved up 42%. You know, you have to be really careful with stocks like this that move that much in 1 week. You know, you can lose your shirt if you put all your money in one basket. So that's why I'd say be very cautious about how much of your portfolio you put in volatile stocks like this, because it can really impact your entire portfolio. All right, next, FIGR, Figure Technology Solutions Inc. This one's looking like it's pulling back a little bit. It was introduced to became public on September 11th, 2025. It is looking pretty positive still, where it's holding up above Tenkan-sen, Kijun-sen. Notice how the cloud itself hasn't really formed yet. There's not enough data, not enough time where this chart has had for the entire indicator to start forming correctly, right? So in order to see to get more insight, maybe you have to switch it to a shorter time frame, like the 4-hour. You get more data. How about the 2-hour? You see what I'm saying? And the 1 hour. So here we are in a 1 hour, and you can see it's a little bit more, giving you a little more insight. So you can see it's dropped here on the 1 hour. We're under the moving averages on the, let me just check the weekly chart. Yeah, see the weekly chart, we're just kind of moving up. There's not enough data for it to even create information for us to review. So something like this, I would be just using a 30-minute chart and a 1 hour chart maybe. If you're day trading this, you know, you can trade it on a 3-minute. On a 3-minute, you can see it's been pulling back. All right. How about FSLR? Let's start out. Let's look at that. By the way, guys, you know what stocks are doing really well? And I'm just going to guess Donald Trump is not very happy about this. Solar and wind. Check out TAN. This is the ETF. Let me just show you this first. TAN Solar has emerged. Let me show you this. I shared this with my members in a previous video, in the members only videos. Check this line. See that big decline here? When it got into the cloud, it had dropped approximately 64%. Here's a perfect example of when it makes sense to start considering adding positions into a stock. When it emerges, when it pops out, okay, pops its head out, checking to see if it's safe. All right, what you see here is once it got above the cloud there, it's actually moved up approximately 8.75%. The cloud itself has turned bullish on the weekly. This is a weekly chart we're looking at here. So these are weeks. And the 200 days still dropping, but we've got some room before we hit that resistance level, about 16.9%. This is a reversal candle on the weekly chart. So I don't know what's going to happen next week. Here's the daily chart. You know, it's had a nice little run here on the daily chart. Once it got above the cloud back here, it's moved up 32.46%. So not too shabby. And you can see how on the daily chart, price did emerge and popped not only above the cloud, but also above that 200-day moving average. And now, if you look closely with the solar stocks, they're starting to basically You see this 200 days starting to rise. That's a good sign. Okay. So knowing this, let's take a look at FSLR for solar, which is a great company. $24.8 billion capitalization. Sales growth rate is 8.2. Profit margins are 28.95%. It's an American company that will benefit, obviously, right, in the event that we shut down from China. Most of the solar panels have been coming from China because they're so cheap. But yeah, so First Solar will certainly benefit in this scenario. And on the weekly chart, it looks good. Like I said, here it is. And there it is on the daily. So I like FSLR. It is down 1.78%. How about physical palladium shares, PALL? This is an ETF that you can buy if you want to have exposure to palladium, the metal. Here it is on the weekly chart. Check it out. Breaking through, getting above that 200. And it's up 1.21% today, right? But it did drop a little bit this week. Let's look at the daily chart real quick. Yeah, it's kind of stalling right there. So it's what this is essentially is it's kind of building a little bit of a base right there. Okay, and so now what I'd be doing is I'd be like sitting on my hands just waiting to see what happens here. Because if it gets under the lows here, it's more than likely to pull back. If it gets above the highs, it's going to more likely to pop above. So right now it's just taking a breather, basically. So we'll see what happens with palladium, but I like it. That's why it's got a blue flag. What about PL? PL on the daily chart is holding up above the Tenkan-sen here. It was down 4.09%. Planet Labs, industrial sector, aerospace and defense. It's, profit margins aren't great here, but it is a sector that has done pretty well in this environment that we're currently in. Here's a daily chart. Here's a weekly chart. Ooh, I don't like that candle. It's a reversal candle that's forming. And if it does drop, you've got yourself a potential drop of about 20. We're talking about from where that price currently is. If I just hover here, it measures 30.32% drop to the next support level on a weekly chart. And on the daily chart, we're only about 4% away from the Tenkan-sen. So it's still looking pretty good here. I think I would be managing this more based on the daily chart at this point because it is still holding up above Tenkan-sen. And if you look at because if you switch it to shorter time frames, it's certainly going to be dropping. I'm going to guess on the 1 hour, it's probably, it's like finding support at the cloud. All right, a little bit of zigzagging here. It's kind of stalling. So that's what I got for you on PL. How about SILJ? This is ETF for Prime Junior Silver Miners ETF. Today, it looks like it could possibly close under the Tenkan-sen. Down 1.09% currently. It might close under. We don't know until 4, like I said. So I'd be watching this. It did close under here briefly and then continued. It closed under here, under the Tenkan-sen briefly, and a few days later, it continued its path up. So I don't know what to tell you. It just looks, right now, I wouldn't be adding any position here today. Certainly not. And on the weekly chart, what does it look like? Ooh, my goodness. Okay, I don't like these candles at all. If you've been watching my channel for a while, you know when I see a long wick at the top and a small body, okay, it almost looks like a gravestone doji. Let me show you guys that pattern, which is a negative one, by the way. There it is. See that gravestone doji? Bearish, single candle patterns. If you see this candle, something that looks like this, after a move up, that can potentially lead to a drop. What does this signify? It means that the price reached this high, and then the sellers pushed it all the way down to that level, and it closed there. So a lot of enthusiasm, but once it reached a specific level, the shorts came in and pushed it down. Now, if it closes, it gets under that low. Watch out. So yeah, maybe this could be a potential place. Now, we did have a reversal candle here, and then it continued to move up. So I just watch the low of that candle, which is currently 23.26, and see what happens. All right. Okay, and that's the weekly chart. Here's the daily chart. Okay, it looks like it might potentially close under Tenkan-sen. All right, SOUN, Soundhound. I talked about this stock a long time ago. And I think it was in 2024 that I was talking about this stock, and it had this big expansion. I mean, it moved up from October or so. Yeah, October 2024, it moved up approximately 355% in 2.4 months. It's an interesting AI play. You should check out the company, SoundHound AI Inc. And on the weekly chart, you can see it's moving up. It's looking pretty good. It still isn't profitable yet. Operating cash flow is negative, but the capitalization is $7.6 billion. They've got some good big partners. I'm sorry, that was a monthly chart. My bad. This is a monthly chart here. So the last 3 months, it's been moving up. Here's a weekly chart. It looks to me like the Tenkan-sen, I'm sorry, the single span A is about to cross the single span B here. So I like that. This weekly candle is not bullish, so we might see a pullback. Here's a daily chart holding up. So you got support right there around the 1775 level, the Tenkan-sen. It crossed it briefly and then came right back above it. So overall, I kind of like it, but except for the fact that it's not still yet a profitable company. What about EL? Estee Lauder. This one here dropped a lot today, down 7.12%. It was looking good back here on Wednesday, October 8th, and then the next day, we got that bearish candle, which essentially kind of created what's called, here's another interesting pattern, tweezer top. See those wicks right there? They're at the same exact level. It's called the tweezer top pattern. Let's take a look at that real quick. And if you guys like this candle pattern reference sheet, you can get it for free on my Twitter page. I'll show you in a second. So look, again, you would look under bearish double candle patterns, and you just go all the way to the right, and there it is, tweezer top. The body doesn't, it doesn't matter how big the body of the candles is. That has no significance. It's all about where the wick is. If the wicks are really close to each other, like you see right here, almost around the same level, you call that a tweezer top. And that is what we've got here. You can see that right there. And look what that led to when price got into the low. Boom, dropped almost 7%. Let's see. So how do you, let me show you guys how you can get that cheat sheet real quick. Go to my, again, at Blue Cloud, no, I'm sorry. Where is it? Yeah, at Blue Cloud Trader is the handle for x.com. And if you, right here, you'll see posts, all my posts there. Click on highlights. Okay, click on that tab. Scroll down, there it is. And below that is a pattern reference sheet as well. So you can download these, I think, for free. Okay, next, we've got Roku. And Roku has is finding some support here at the cloud. Okay, on the daily chart. Let's take a look at the weekly first. I want to see what this looks like. Okay, so it looks like it might end up closing above. It looks like there's a little bit of buying here. Let's look at the 3-minute chart. It might have found a bottom, possibly here. We did get a positive crossover. The Tenkan-sen crossed above the Kijun-sen on the 3-minute. What about 5-minute? No, not yet. This could potentially continue dropping. And so the daily chart, it's dropped. It's stalling right at the top of the cloud. On the weekly chart, it looks like it's finding support at the close to the Tenkan-sen, possibly. Remember, it's 12:43 p.m., so we won't know until 4 on this one. So I wouldn't be adding a position, certainly not. Okay. If you're profitable, you might, if it closes under Tenkan-sen, you might, or close to that around closing time, or maybe around 3:45 p.m. I'd be checking to see where it's at, and maybe, take your profits if you're in profits. What about UNH, United Health? This one I don't like because it's under the cloud. As you can see here, it has had this little move up briefly on the daily chart. Okay, it's been up in this little up channel on the daily chart, but look what's happening. It's gotten under this trend line that I drew. Trend line should probably be like maybe a little bit more like that on a, if we're looking at a daily. Let's look at that right there. Okay, yeah, I can see. So you can see here, price touched right there, dropped under here, pulled back a little bit, came back, found resistance at the trend line, dropped, and now it's still staying under that level. So, and this is another pattern, guys. Check this pattern out. Let me show you what this pattern is. They call that a falling wedge pattern. So we go to the patterns cheat sheet. not that other form that I mentioned earlier. And here it is. I'm sorry, it's a rising wedge, and it's bearish. That's what it's called, rising wedge. So you can see you get the higher highs here, higher lows, but then it forms this type of pattern right there, which is bearish. And if price gets under the trend line, it tends to drop. Now that's what we've got. So yeah, a series of little higher highs and higher lows, and it gets under the trend line, and it could potentially drop some more. I don't know. We'll see with UNH, but I wouldn't be touching this one since it is currently under the cloud on the weekly chart, and there's a reversal candle that's forming on the weekly too. XYZ block ink on the weekly chart above the cloud, but under Tengen's in the 9 period and above the 200 on the weekly. On the daily chart, let me look at the future cloud. The future cloud is still bearish. See how the Senko span A is still under Senko span B? And on the daily chart, we've got ourselves, we're inside the cloud. We're inside the cloud. So no on this one. Overall, you know, it's like it's done pretty well, but it's been starting to show a little bit of weakness. And if you look closely, it basically it's consolidating right here. Let me just show you guys what I'm talking about. It's got this little box that you're in. Nicholas Darvis. Check out Nicholas Darvis box trading. It's stuck, and it needs to either break above for a continuation, or if it gets under the low of that box there, this low here, around 71.69. If it gets under that level, I'd be really concerned, because then it's more likely to drop. Right now, this could certainly be a hold position as long as it stays within it, right? So it's like, but I'd be watching it closely. And that's going to do it. That's going to do it for this video, guys. Thanks for watching. Appreciate all of you. Don't forget to like and subscribe. It's always free to do that. And if you do want to support the channel further, you know, become a Blue Cloud supporter. You can also become a Blue Cloud supporter by clicking on the join button and clicking on this right here. You can even request a stock to be analyzed on the show. You can, of course, do that with any of these 3 memberships. Thanks again. Have a great rest of the weekend. I'm going to be doing another video this weekend, members only video. So look out for that. And I'll catch you all in the next one.